Guys, James White here with Bull Market Stock Trades. Welcome to the next video in the series I am creating. In this video, I will be teaching the uptrend chart pattern that I like to play. Right now we're looking at the uptrend, and however these start, whether it's a pattern breakout formed. The company had a great earnings release, a merge, great news press, whatever happened that sent this stock into an uptrend, the goal is to catch it in the first couple waves. So once this stock broke out down here and this first wave formed, you can see I was able to start a trend line from here to here, and I was able to draw that trend line straight on out, all the way back here in September. And you can see as the months went on, that stock played off of that original trend line almost perfectly as the stock went up. Now this uptrend lasted nearly 6 months before it finally broke. Now many years ago, a man did a study and on these uptrends, and he came to the conclusion that they go in waves of 5. So you can see here 1, 2, 3, 4, 5. It's not perfect. You can use your imagination, but you do see kind of 5 waves there. Now it doesn't happen in waves of 5 every time, but in these uptrends, when you do start getting to the 5th wave, you want to keep a close eye on them to see if the trend is going to break after that 5th wave. It doesn't always break. Sometimes it keeps going, and sometimes it doesn't make it to 5, but 5 is a good rule of thumb. Now, there are 3 ways to play the uptrend alerts that I put out. The most conservative way, the least aggressive way, you would have put in, you would have bought your shares down here, so you bought 1,000 shares, and you would have just left them in there. As long as this trend continued, you would have left your investment in with GTIM, and you wouldn't have pulled it out until the trend finally broke. So you can see, this thing started, in the 3s and went up to almost 9. The stock nearly tripled in 6 months. It's somewhere with 250% return. I'm always making fun of the S&P 500. The S&P 500 annually, on average, returns 11 to 12% a year. This is one stock alone, doing 250% in a matter of 6 months. So buy down here, leave your money in all the way up until the trend line breaks. That's the least aggressive way. Now the moderate way, this is called organic growth, organic trading, some people like to call it. And that would go something like this. Let's say you bought 1,000 shares down here. At the top, at this spike, you would take out 500 shares, take out half your shares and leave the original half in. When you came back down the trend line, you would put your half back in, and up here you would take your half back out. So your original 1,000 shares, when you pulled out half here, the other half would have stayed in. You would have left that 500 shares in the entire time, while the other 500 shares, you were just trading off these spikes over and over and over. So even if one of these spikes failed and you lost money, at least you still had your core 500 that continued to grow, and you made profit there. It's probably the smartest and safest way to trade. It gives you quick cash combined with the long-term cash. Now the most aggressive and profitable way to play it, which is also the most risky, would to put all your money on the table here, take all your money out here, all your money on here, take it all out here. So 1,000 on, 1,000 off, 1,000 on, 1,000 off, all your shares over and over and over. Now the question I get from people the most is, when do I sell? Now I know this is not what people want to hear, but there's no perfect answer for when to sell. It's something you gotta get a feel for. After you trade for a while, you get a feel for the market, and you'll know when to sell. Some people want to buy at the very bottom of the spike and sell at the very top. That's only brand new traders. They only want to trade like that. But the truth is, if you bought down here and you tried to sell all the way at the top, let's say you bought down here, you want to sell all the way at the top at this spike, trying to catch this spike at the very top, what would have happened is, all of a sudden the trend would have reversed on you and plummeted like you see here, and you would have lost all your profits. So I like to sell about 2/3 of the way up. When I start feeling like I'm 2/3 of the way up on a spike, right down this area, I'll sell and preserve my profits. Now another awesome way to decide when to sell is to use the Bollinger Bands. With the Bollinger Bands on this stock, I wish I could just do all my trades right off the Bollinger Bands. It'd be so easy. But the Bollinger Bands aren't always perfect, and eventually they will fail you, and you will lose some money. But they provide a guideline. They highlight the highs of a stock and predict where it might go. So if we would have bought on the trend line, once the stock pierces the Bollinger Band, time to sell. Time to sell. You'd buy down here in the trend line, sell it up here because it pierced the Bollinger Band. Buy it down here on the trend line, sell it up here because it pierced the Bollinger Band. Same thing. Buy it down here on the trend line and sell it up here because it pierced the Bollinger Band. This is a 6-month cash cow. This is so easy. This is easy trading right here. I love these uptrends. And they're going on in the market all the time. There's always uptrends that you can play. I'm going to show you a few more here. This is UQM. It only made it through 3 waves, but you can see the same thing. I have a trend line in here combined with the Bollinger Bands, and it provided me a guideline of where to buy and where to sell at. And then when it finally broke the trend line here, that's when you stop making the trade. You take all money off the table, and you move on to your next play. Let's take a look at Denny's. Denny's, I'm in play right now. I take profits on this thing over and over and over. I started with my original trend line. This was kind of an aggressive trend line here, and the trend has actually changed and came back a little bit more conservative. The healthiest trend line, the best trend line you can have, is about a 45-degree angle. But you can see how Denny's has been bouncing off of the trend line here. Buy at the bottom, sell at the Bollinger Band. Buy at the bottom, sell at the Bollinger Band. Let's take a look at one more stock before I end this video. TTGT. Now, as far as waves of 5 go, like I said, it's not always waves of 5. I can't even count how many waves are in this one. I don't know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Use your imagination. But the same thing. It works out perfectly every time. You buy on the trend line, sell when you pierce the Bollinger Band. Buy on the trend line, sell when you pierce the Bollinger Band, over and over. You do this for months. This one went on for 8 months until it finally, broke the trend here. Then all money would come off the table, no matter which of the 3 strategies that you were playing that I told you about, least, moderate, or most aggressive. This thing started in the 6s and went up to the 12s. It was 100% return. It doubled. This thing doubled in 8 months. So, with that being said, look out for my future alerts. I put them out every week. Every week I put uptrends like this out. I put all these out for free for the time being. To get on my alerts, my email alert list, just subscribe through my website, www.bullmarketstocktrades.com, or inbox me your email address on Facebook, Bull Market Stock Trades. I'll add you to my email list, and you will get these trades every week, and you can trade these, and you can take profits as easy as I just showed you. Thank you, and have a great day.